This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on July 10th, 2014. Our time is 8:44 in the morning Mountain. Our radio show runs on your favorite radio stations. Also, the shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. Harold does daily market commentary. You can find it on his websites. You can also find it on our podcast site. And we podcast through iTunes. Type in World Financial Report on Radio. You'll find the market updates. You will also find our radio shows there. We are portable. We go anywhere you do. Our radio show runs on 630 CHED in Edmonton. And starting next week, we are going back to Sunday. Sunday at 3 p.m. We were on Sundays. We moved to Saturdays at 3. We're heading back to Sunday at 3 p.m. starting next week. If you would like to receive our free weekly newsletter, maybe you are receiving it from another source other than Harold and are no longer receiving the full World Financial Report on Radio newsletter, we encourage you to give Harold a call, and you can speak with him at 1-800-432-1022 or connect with him at rarecoloreddiamonds.com. We'll be happy to send out our full free World Financial Report on Radio newsletter. If you would like to receive it, you're no longer receiving it, you're getting it from another source, we'll be happy to put you back on our list and send it out via email free of charge every week. It's the companion to our radio show. And really, you can go through it in minutes or spend hours if you want. And it's important to read because we have a lot of our top stories in the newsletter. As we wake up this morning, tape our show in Portugal, there's a problem with the bank there. And in fact, there's concerns that they might not be able to make a debt payment. One of the big banks in Portugal, as a result, you're seeing stock markets take a major hit. Harold had predicted this would happen, and we thought it would happen. We just didn't know when and how quickly. It was quite shocking that it happened so soon. And we're talking about bank accounts being taxed. You're being actually told you have to pay to have a bank account. In Spain, they are going to charge a tax of 0.03% on bank deposits. Spain on Friday said it would introduce a blanket taxation rate of 0.03% on all bank account deposits, in a move aimed at harmonizing regional tax regimes and generating revenues for the country's cash-strapped autonomous communities. The regulation, which would bring in around 400 million euros, that's 546 million in US dollars, to the state coffers based on total deposits worth 1.4 trillion euros. So here we go, as predicted by Harold, that they would start dipping into bank accounts. That is exactly what we're seeing. And it doesn't matter what you call it. You call it a tax. You can call it them going in and bailing in. The truth of the matter is, Harold, they're going into bank deposits in Spain, and they're taking money out. And it's one of those things I think people have to be very aware of. It could definitely happen and start happening all around the world.
There's no doubt in my mind that it is going to happen, and it's not going to be too long till it happens here in North America either. So, again, the situations in Europe and the situations in the United States and in China and almost all areas of the world have not gotten better. All the money that these governments have thrown back into the marketplaces have not had the desired effect, and you're now going to start to see things start to crumble. You know, we had a big move in gold this morning. Gold opened up $12.40, actually was up as much as $15. Now there's a little bit of resistance in gold at the $13.50 level. We hit $13.46 this morning, so a little bit of resistance at $13.50, but once the market breaks $13.50, the next major level for gold is 14 1/4. Silver, the same thing. Silver's up 33 cents. We're trading at 21.53. Did hit a high of 21.65. There is resistance in silver at 21.80. We get two closes above 21.80. This market could very easily go short term back up to $24 to $25. Platinum's up $7, trading out at $15.17. Platinum's done very well. Palladium's up to $870. The Dow opened down 175 this morning, basically on the news of what Randy just spoke about with the banks in Europe. It's a really scary situation to think that the banks have not gotten healthy during these last 5 or 6 years. In fact, the banks are in big, big trouble. And when a bank is now going to charge you for keeping your money in the bank, and that is not only happening in Portugal and Spain, it's going to happen throughout Europe, and it's going to happen throughout North America also, because the banks need income, and they are the biggest thieves when it comes to dealing with people. They just don't care. The fact is that a lot of people, don't have any options. You need to keep money in the bank in order to pay bills and keep, what we always thought was safe money. You keep your money in the bank, you get paid interest on it, and your money is protected. But your money isn't protected. We learned that last year with Cyprus when half the money was stolen out of depositors' bank accounts. So, again, the situation with the banks is dire. It's going to get worse and worse, and it's going to affect the markets in a huge way. Again, just looking today, that with the news that came out of Portugal this morning, the Dow was down 175 points at the opening, and the NASDAQ was down as much as 50 points. The economy in the United States is not getting any better. In fact, it's not getting better in Europe, and it's not getting better in China. You're going to see a lot of news coming out of China within the very near future that's going to frighten everybody because, again, China is not in the great financial shape that a lot of people profess that it is. So watch what's going to continue to happen in Europe, in the United States, and China. Money is very, very tight, and let's face it, the fact is that there's debt all over the world, and the debt just keeps getting higher and higher and higher at a time when business is very lax. So, again, we see big fireworks coming up within the very foreseeable near future. In actual fact, it's actually starting. On top of that, there was some major news coming out of Israel that there's fighting again between Israel and the powers that be there, and that's going to continue to escalate. So you've got these world situations that are happening. You've got bank problems in Europe that are going to spread into the United States and China. And again, everything that I'm seeing is leading to extremely high inflation. High inflation is going to come as a result of extremely high food costs, which have gone up 25% in the first quarter of this year, and then add to the fact that oil is sitting nicely above the $100 level. I know that the governments are trying to keep the price of oil down because it's detrimental to any type of recovery that they want to see in the United States and other parts of the world, but the fact is that you can only compress a market for so long. Oil is a very bullish market. There's no doubt in my mind that we are going to see oil prices within the next year that could be in the 140 to 150 range. So that's going to bring up gas prices. It's going to cost more to heat your home, fill up your car, do almost everything that we do. And then on top of that, with food prices skyrocketing 25% in the first quarter, and they go much higher than that, there's no doubt we're going to have inflation. Now, to fight inflation, you raise interest rates. That's what the Federal Reserve is supposed to do. However, they're not doing that. They're dropping interest rates. So basically, you've got the type of scenario right now where we have a platform for extremely high inflation because of food and oil costs and the fact that wages are not going up. And then, we're going to see a situation where the markets are going to react to that. So, again, I see that the only way out as far as an investment goes, if you're sitting in paper assets, again, today's a good indication. You had bad news coming out of Portugal with one of their biggest banks. The market opens down 175 points. The TSX is down 100 points. The fact is that all these markets and all these banks are intertwined with each other, so when one coughs, the other gets a cold type of thing. So things are not as good as they say it is. In actual fact, things are going to get an awful lot worse. And with inflation coming and interest rates so low, and they're not looking to raise interest rates at this point, it's a tremendous platform for extremely high inflation. And once inflation starts to really rear its ugly head, you're going to see prices in precious metals and oil and other markets that are basically driven by by inflation. We're going to see massive moves in these markets. We had a tremendous bull market in gold and silver between 1999 and 2011. We saw gold go from $250 all the way up to $19.20. We saw silver go from under $4 all the way up to $50, and we saw oil go from $18 all the way up to $150. Those type of scenarios are going to happen again, but it's going to be much more volatile, because the fact is that we had an orderly bull market that we could predict what the prices were going to be for 11 or 12 years. Now that's not possible because you have interference with government agencies. You've got the Federal Reserve playing with the markets. We know that the exchanges in Chicago and New York play with the markets. We saw what happened in 2011 with gold and silver, and it's continued to happen. However, you can only suppress these markets for so long. And what's going to happen is that the price of gold is going to skyrocket just like it did in 1980. You had an orderly bull market in gold and silver from 1972 all the way up to 1979. But then we saw gold and silver break out. In fact, you saw silver go from $20 to $50 in only a few months. So the orderly market that we had in gold and silver, I don't believe we're going to see again. What we're going to see is tremendous volatility and massive upswings in the gold and silver market. So we do believe that the price of gold is not only going to surpass the all-time high of 1920, but we think it's going to go to $2,000, $3,000, $5,000, $10,000. The situations around the world are so dire and so extreme, and the banks are in so much trouble, along with the governments, that we're going to see that type of market. We're going to see silver, which is in shortage also, as is gold, skyrocket in price. We could see silver go from $20, $21 that it's at right now, almost right back up to $50 in a very quick time, maybe 2 or 3 or 4 months, and then the market's going to explode from there. So the fact is that if you have your money sitting all in one area, if you're in bonds, if you're in stocks, you're going to have a rough ride of it. There's no doubt about it. And if you're in your 50s, 60s, or 70s, and you haven't done anything to protect yourself against your paper assets, which are your retirement funds, your money in the bank, your bonds, and your stocks, you're going to find that these markets could absolutely crumble again this year. Again, this morning was just a brief indication as to how the banking system in Portugal affects the Dow Jones down 175 points at the opening of the market. My strongest recommendations are to own hard assets, assets that you own yourself, that are in your possession. You want to own gold, you want to own silver, you want to own diamonds. Certain diamonds do tremendously well during these extremely difficult times. In fact, there are certain diamonds that do much better than any other investment, especially with the type of situations that we're looking at right now. You look at the banks paying under 2%, and now they're going to charge you to pay your to keep your money in the bank. So I'm a little confused, and I'm going to have to research this a little bit more. But if the banks are going to charge you to keep your money in the bank, that probably means that they're not going to pay you any interest, because it doesn't make sense to pay interest and then charge you a fee to keep your money in the bank. They may just totally do away with interest at this point until it reaches a point to where it makes sense for them to do it. Don't forget, back in 1979 and 80, when inflation really hit heavily, the governments got caught off guard, as did the Federal Reserve, and they had to raise interest rates very quickly. And because inflation was so heavy and so strong, they had to raise interest rates several times in a row. It went all the way up to 22%. A lot of us remember back in 1980 to 82 that we had 22% interest rates. Try to get a mortgage or even afford a mortgage on 22% interest rates. I believe those days are coming again. If you don't learn from history, history tends to repeat itself, and we're in a situation right now that looks very, very familiar to me. So again, I'm very strongly looking at buying physical gold and silver again at these levels. Again, you're never going to pick the exact top or bottom of a market, but based on what I'm seeing and based on what's going to happen within the foreseeable near future, I think the gold in the $1,300 range and silver in the $21, $22 range is a steal, especially since we've seen gold at $1,920 and we've seen silver, as high as $50. So my gut feeling tells me that with the geopolitical situations happening, with the news that we just found out about the banks in Portugal today, that Spain is going to start charging people to keep their money in the bank, this is all leading to a very similar and familiar scenario that we really started to think about several years ago. So there's no doubt in my mind that we're in the right markets at the right time. All we need to do is sit back and make sure that we have our assets intact when these markets take off. When gold and silver start to take off, there's not going to be any warning. We're looking at right now, I know how to read charts. I've been in the business 35 years. I can read all types of charts on all types of commodities, and basically we're trading in a range right now in gold and silver. However, we're breaking through some important resistance and support levels, and that's very, very important. Again, very similar to what we saw back in 1999 and 2000 when we first started recommending gold and silver, when nobody was even thinking about that market at this point. We're now in a very similar situation. The powers that be, the financial media, the world banks, the Federal Reserve, all those institutions have trashed gold and silver over the last 3 years. Their primary goal was to bring down the price of gold and silver because gold and silver will signify that there's an issue or a problem with the recovery that's happening in the United States and other countries in the world. Well, we're not stupid. We certainly understand that the recovery is not working. And by beating up the price of gold and silver is not the answer. These are free markets. They're supposed to trade on their own volition. The fact is that for those of us that believe that we're going to see high inflation, that we're going to see currency devaluations, that we're going to see banking problems and other financial problems that are happening in the United States right now, it's one of the only answers. Gold and silver have a track record. They have a history. They have a different relationship with the U.S. dollar. When the U.S. dollar is extremely weak, as it is right now, gold is a fantastic investment. Now, the fact is that the U.S. dollar was down at 72.5 cents in 2011, and that's why gold was at $1,920. Now we're sitting with the U.S. dollar trading at 80 cents, about 8 cents higher than where it was in 2011, and gold is come down to the 1340 level. So you can see the relationship between gold and the U.S. dollar. And the fact is that there's so much printing of money going on that the U.S. dollar has to continue to fall until they start to raise interest rates, and they're not willing to raise interest rates now because it'll kill the stock market rally and it'll destroy what's happening in the real estate market. So they're really in a catch-22. The government's in a real dilemma. At this particular point, they realize that inflation is coming and they're going to have to raise interest rates, but the fact is, raise interest rates and kill the stock market rally, it's a real dilemma for them. So what I say is that the markets have got to trade on their own volition. There shouldn't be any interference from the government. I understand how difficult things are and how desperate they are at this particular point to get things back on track, but fixing the markets is not the right way to go. These markets have got to trade on their own. Every market has its own situation, and basically gold and silver do well when the economy is doing poorly, when the dollar is weak, and when there is high inflation. Back in 1990, when the U.S. dollar was extremely strong, the stock market in the U.S. was very strong, and so was the economy. Gold was at $250. Nobody even invested in it. But now we're still sitting at $1340, and it certainly signals that there's situations that we need to be concerned about. I'm a firm believer in being conservative, especially in these type of markets where things are very volatile. I own my gold outright, I own my silver outright, and I own my diamonds outright. So the fact is that those are the three areas that I believe are going to give us preservation of capital, going to hold on to our money. We're not going to lose it in the marketplace. And then on top of that, it's going to give us an opportunity to make a lot of money, and there's very few assets like that. Diamonds will give you the stability of your investment because they don't decline in value, but they give you potential for huge returns down the road. So, again, that's what we're recommending to our clients. Own your physical gold, your physical silver, and physical diamonds, and not only will we get through these difficult times, we're going to make an awful lot of money.
Speak with Harold personally and privately about investing in hard assets. Also, if you are receiving our free weekly newsletter and would like to get back on our list, you are getting it from another source, no longer getting our World Financial Report on Radio newsletter, we'll be happy to send it out to you. Connect with Harold at 1-800-432-1022 or go to rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022 to speak with Harold about investing in hard assets. And if you are getting our newsletter from another source, you are no longer getting the World Financial Report on Radio newsletter. If you would like to get our newsletter again, all you need to do is connect with Harold. We'll be happy to get you on our free mailing list. We send it out via email free of charge every week. One of the reasons we advocate investing in hard assets is obviously protecting yourself from inflation. And we're really starting to see it in food. In fact, in our newsletter, we have two charts. The cost of eating. In fact, the consumer price for ground beef in May rose 10.4% from a year earlier. Pork chops climbed 12.7%. The price of fresh fruit, 7.3%. Oranges, 17.1%. As well, for those in the United States who were taking part in the 4th of July, they did a survey about how much it would cost to put on a 4th of July party. And it's interesting to note that, and we have a complete list here, that the cost of ground round shot up 13.3%, pork spare ribs 13.2%, and American cheese 14.3%. They actually say there was an increase of 5.40% when it came to putting on a get-together for the 4th of July in the United States. Obviously, that's one of our main concerns, and that is inflation. And you want to have an asset that puts you in a good position with the inflationary pressures that we're feeling, not only at the gas pumps, but obviously at the grocery stores as well. Many people, including John Williams from Shadow Stats, argue that the numbers we receive are being calculated in a way to benefit the government so they do not have to pay out large amounts of money when it comes to indexing of pensions and other payments they make due to inflation. They're keeping inflation low through mechanisms of calculation. If you go back and use what they calculated inflation on back in the Reagan years, back 20, 30 years ago, inflation is running much, much higher. So we can't really believe the rate that we're hearing, but you can protect yourself by having hard assets. And we encourage you to speak to Harold about investing in rare colored diamonds at rarecoloreddiamonds.com or 1-800-432-1022. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on July the 10th, 2014. Our time is 9:11 Mountain. Radio show runs on your favorite radio stations. We run on 630 CHED in Edmonton. The show, we were on Sundays at 3, and we moved to Saturdays at 3 starting next week. Next week, we're moving back to Sunday at 3 p.m. on 630 CHED, and congratulations to 630 CHED. It was announced that 630 CHED, and I know Harold's very excited about this as well, the Edmonton Oilers will be on CHED for another 6 years, so that is outstanding, outstanding news. To connect with us, if you do miss a show, the shows are archived on Harold's websites, HESradio.com, rarecoloreddiamonds.com, We have a podcast through iTunes. Go to iTunes, type in World Financial Report on Radio. The show is portable. We go anywhere you do on your portable device through iTunes. Harold does daily market commentary on his websites. You can find it on the podcast site as well. To speak with Harold personally and privately about investing in hard assets, his telephone number, 1-800-432-1022, 1-800-432-1022, and rarecoloreddiamonds.com, rarecoloreddiamonds.com. It was interesting to note this week, and I wanted to mention it because I thought it was quite important. A retailer that's closely tied to the housing market is crashing, and this is on the stock market, after a profit warning due to the economy. And this is Lumber Liquidators. They're saying that the experience they had in March when it came to poor customers, a poor amount of customers coming through their door, carried into May and was even worse in June. Another company, the Container Store CEO, gave a shocking warning about the state of the consumer. He said basically that they're really seeing the consumer pull back, and he believes they're in a retail funk. Walmart CEO saying things aren't getting better for America's middle class. And we have a story here. The price for the American dream, USA Today put something together, and it's $130,000 per year. And that shows that living the American dream would cost the average family about $130,000 a year. Only 16 million U.S. households, around 1 in 8, earned that much in 2013, according to the U.S. Census Bureau. So what do you do? We talked about inflation. We talked about the economy start to roll over in the United States. How do you protect yourself from obviously having a situation in Spain where they come in and dip into your bank account? Harold, we believe it's hard assets. It's hard assets like diamonds. And our featured diamond of the week is a .44 carat oval cut, fancy, vivid, purplish pink argyle. If you go to rarecoloreddiamonds.com, take a look at the featured diamond of the week. You'll see video there of it, and you can see a picture of the diamond in our newsletter and a link to the website, rarecoloreddiamonds.com. But Harold, with all that's going on geopolitically in the world and what's happening with the economy and the bail-ins, the taxation of bank accounts, you have all sorts of scenarios like today in Portugal, a big bank concerned about them not being able to make a debt payment. That's why we advocate investing in hard assets like diamonds.
You bet, Randy. It's never been more important to own an asset like a rare colored diamond, an investment quality diamond, than it is now. Because, again, just the news that's coming out of the markets today should be extremely concerning to us. Keeping our money in the bank, not making any money, and now they're going to charge us money is a ridiculous thing, and it's only a prelude to what's coming. It's going to get worse and worse. And as Randy just reported before, you know, if Walmart is coming out and saying that retail sales are down so far, in actual fact, Lumber Liquidators, their stock is down 22% this year. So the middle class really runs the economy of the country. When the middle class is doing well, they're spending money, they're going on vacations, they're going out for dinner, they're going to movies, they're buying things, they're going to Walmart. The economy is robust, but that's the opposite of what's happening right now. The middle class is so beaten up at this point and has lost so much money, lost their jobs, their good paying jobs and everything, that's just not present at this point. And it's going to get worse and worse. Walmart stocks are going to continue to drop because that is a particular organization that caters to the middle class, and the middle class is shrinking tremendously. So when we look at what's happening with the banks, with the stock markets around the world that are being manipulated, you know, if you're in stocks, a lot of people, even though the market has gone up substantially, has only made back the money that they lost back in 2008 and 9. So imagine you had to stay in the market for 5 or 6 years just to get back to break even, and now we're at a point to where this market could easily plummet again. In fact, I believe it's going to plummet again. I do not believe that a record stock market is conducive to what the economy is. I don't see how the stock market in the U.S. is sitting at record levels when the economy is so fragile. It just doesn't make any sense. So it just proves that the market is being manipulated to the extent that with all the money that was printed, that the Federal Reserve put back into the market, you're talking trillions and trillions and trillions of dollars. It went into mortgage-backed securities to help the real estate market. It went into the bond market to support bonds, and then it went into the stock market to support stock prices. So you've got a phony rally in the market that the only people that took advantage of it were the hedge funds and Wall Street. They knew it was going to happen because it was laid out to them, especially the people at Goldman Sachs who were involved in this situation when the whole market crumbled in 2008. Myself personally, I have nothing in stocks. I have nothing in paper assets whatsoever. Everything that I own is very conservative and I believe is the right investment for the time. I've got a lot of money sitting in physical gold and silver. I'm a firm believer that with inflation coming, and there's no way that we're not going to have inflation eventually. So if you believe that we're going to have inflation, you need to own gold, silver, and diamonds. Those are the three assets that will respond to inflation. If you happen to own stocks or you own bonds and we get into a heavy inflationary market, you're going to see both of those assets plummet. So why in the world put ourselves in that situation again? Let's not be lazy about this. Let's be smart about this. It's going to take a little bit of work, but move your assets around. Get the money that's sitting in your paper assets out of the market at this point because, again, the risks in the stock market right now are extremely severe. We could easily see this market pull back 10, 20, 30, 40, 50%, which are some of the biggest predictions by some of the top analysts in the world right now. So the fact is that if it's possible that this could happen, why would you want to put yourself in that scenario? If it's possible that the Dow could drop from basically the level it's at right now, 17,000, and drop down to 12,000 or 10,000 in that area, why would you want to put yourself in a situation when you can diversify and protect that money? Diversification is probably the most important thing right now, but again, to me, capital preservation is the most important thing, keeping our money, not losing it in the marketplace like happened in 1999 and then again in 2008 and 2009. We're getting right back to that scenario again. The markets are overheated, the markets are moving up based on not sound fundamentals, and that's not a good time to be in the stock market. You're better off sitting on the sidelines right now or diversifying your account and basically hedging, so if the stock market does fall, you have an asset that's going to go the opposite way, and that's gold and silver and certain diamonds. Do you know that in 1980, when we had double-digit inflation, yellow flawless diamonds went up 500%? Do you know that in 1980 you could have bought a yellow flawless diamond around 1 carat for $500, and today they're $20,000? Those are the type of returns that we should be making. Those are the type of assets you want to own during these dangerous times. There's these yellow flawless diamonds, which are maybe 100 for the entire world, that are cut in a year. They never decline in value. They go up by 15%. Now, if you keep your money in the bank, you were making 2%. With inflation and taxes, you weren't making anything. And now that they're going to charge you to keep your money in the bank, it's not a smart thing to do. On top of that, if you keep over $125,000 in the bank, you're not protected. You're only protected up to $125,000. Anything over that, if the bank goes under, you lose your money. So you need to be in the type of assets that are going to preserve your capital, and that's certain types of diamonds. Yellow flawless diamonds, flawless white diamonds are amazing investments. They go up anywhere from 15 to 25% a year and never decline in value. Along with that, they're negative correlated to the stock market, meaning that in 2008, when the Dow dropped 50%, these diamonds went up 50%. If you had $1 million stock portfolio, you could literally hedge it with one diamond. Just a nice quality 5-carat flawless white diamond would hedge $1 million stock portfolio. So if stocks fell like they did in 2008, your other asset, your diamond, would go up that equivalent amount. And probably the best investment of all, which we'll never get another opportunity to do because there's only one mine in the world that produces 95% of the pink diamonds in the world, and that's the Argyle mine. We all know that that mine is going to close in 6 years or less. That means if you own an Argyle pink diamond, you're going to own something that's extinct. There's not going to be any more of these diamonds. And simple supply and demand will tell you that the markets will go up. But the price of pink diamonds will not only go up, they're going to skyrocket. They're going to go up 500, 600, 800, 1,000%, depending on how strong and what quality pink diamond that you have. So again, there are opportunities in alternative markets that are staggering, that will give you exactly what you want to accomplish. What's the difference what the name of the investment is, as long as it has the desired effect, as long as it gives you the returns that you need in order to move forward. And again, we work way too hard to lose our money like we did in 1999 and in 2008 and 9, and believe me, we've gone right back into the same scenario again. The greed of Wall Street has really put the whole scenario back in our face again. We remember 2008, when all of a sudden we woke up and found out that Lehman was out of business, and all of a sudden the markets plummeted and the mortgage debacle happened, and we saw the Dow go from 14,000 to 6,500. That's going to happen again. There is no doubt about that. So if you're in that market and you don't care that you could lose 50% of your money, then stick with the type of investments that you're in. But if you believe, with what we believe, that these markets are going to fall substantially and are very risky, either sit on the sidelines or hedge your position with the type of assets that will protect you. If you own gold and silver and diamonds, you're going to get through these difficult times. You know, gold was at 1920. It dropped down to 1180. It's back up to 1350. The market has not fallen back all that much. The fact is that the market is in very good shape right now. Gold is sitting at a very good level, and this next rally in gold from the 1350 level is going to be staggering. You're going to see moves coming in gold that you're going to shake your head and say, man, oh man, I wish I was in that marketplace. And you're going to see the same thing in diamonds. Rare colored diamonds, the ones that we invest in for our clients, are the best assets you can buy. And then we own our own auction business that will resell your diamonds for you down the road. So it's a perfect scenario and a perfect time to be in these markets. Again, Randy, the featured diamond is one of the most beautiful diamonds. It's vivid in color. Vivid is the highest color grade that you can possibly get in a diamond. And basically, what makes the diamond most expensive is the saturation of the diamond, how deeply saturated it is. So this particular diamond is very large, seeing that 95% of all Argyle pinks are under a quarter carat. This is double that size. It's a .44. It's an oval, which is a very, very beautiful shape, but also extremely popular, especially for resale. And this type of diamond, being that it's vivid purplish pink in color, is one of the best diamonds that you could ever buy. So this particular diamond that is in the 200,000 range, in 10 years from now, will be a seven-figure diamond. You know, there was a blue diamond that sold last month for $17.5 million. It's important because that same diamond sold in 1994 for $2.5 million. That's the type of increases that we see in these type of amazing diamonds. I've seen vivid pink Argyles, which I own, a 2 carat, which is almost impossible to get today, that I bought 10 years ago for $350,000, that's worth upwards of $4 million today. That's the type of returns that you see in the diamond market when you buy the very best. And these are the type of assets you just want to put away. Put them in your safety deposit box and let them just sit there. And wait till these markets continue to climb and climb. When the mine closes and these diamonds hit their pinnacle, we have clients all over the world that buy these diamonds. And the beautiful thing is they can be sold in other currencies, not weak U.S. and Canadian dollars. They can be sold in British pounds and euro, which are worth 30, 40, 50% more than the currencies, the American and Canadian dollar. So every market has its time. With all the volatility in the marketplace right now, diamonds, rare colored diamonds, are one of the best investments for preserving capital and long-term gain. Now, if you're going to invest in diamonds and only hold on to that diamond for 2 or 3 years, you're wasting your time. There's no reason to buy a diamond because in 2 or 3 years it will go up, but not enough, to even warrant buying it. You want to hold on to them for 10 years, 20 years, 30 years. The fact is, the longer you hold on to these, the more and more they go up in value. If you don't need to cash it in yourself, you hand it down to the kids and the grandkids and give them a smart start in life. That's what I've done with my children and grandchildren, and it's worked beautifully. My oldest son, Evan, bought his first house based on a diamond that we gave him many, many years ago. So, again, it's just a phenomenal asset. What's happening with the Argyle mine will never, ever happen again. This will be our only opportunity to ever invest in a diamond that is going to be extinct, and that's the pink diamond market. I've never been more excited about what's happening because of our stature in the rare diamond market. I've been on Bloomberg 4 times in the last year, and it's all because of what's happening in diamonds and our secondary market that we created, which was H. Siegel Fine Auctions. We also use our diamond platform and our diamond business to raise money for charity. The charity that I support is the Susan G. Komen Breast Cancer Charity. Again, it's a charity that's very close to my heart. We held an auction for them a couple months ago and wrote them a check for $70,000 in 1 hour from our auction. They're ecstatic with the relationship, and so are we, and that will only grow. Again, we use our auction business and our diamond business to help benefit others. So, again, Randy, we're in the right business at the right time with what's happening in the currency markets all around the world and what's happening with inflation. Rare colored diamonds are about the best investment that you could make.
And one in diamond that we would recommend to be a cornerstone of a diamond portfolio, whether you're starting one or adding to an existing portfolio, it's our featured diamond of the week, a .44 carat oval cut, fancy, vivid, purplish pink Argyle. Go to rarecoloreddiamonds.com. Take a look under the featured diamond section. You'll see video of this diamond, 360. And as well, you can call Harold and speak with him about the diamond personally and privately at 1-800-432-1022. 1-800-432-1022. If you are receiving our free weekly newsletter from another source, you are no longer getting our World Financial Report on Radio newsletter, the companion to our radio show. Harold will be happy to add you to his list. We send out via email free of charge our free weekly newsletter. You'll see the diamond section of our newsletter. We have information on gold and silver, platinum, palladium, charts of the week, quotes, and quick hits. This is the proprietary World Financial Report on Radio newsletter, the companion to our show. If you are getting another newsletter, this is not a newsletter that's associated with us. We would encourage you to sign up and receive our free weekly newsletter yet again. Connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. And in our newsletter from last week, for those that might have missed it, the Argyle Pink Diamonds Tender is celebrating its 30th anniversary. Desired by many top jewelers, top diamond experts such as Harold and Rare Colored Diamonds, come a long way, changed the course of jewelry history and contemporary jewelry design. The 2014 tender is going to debut in Sydney on August 14th and 15th. So here we are about a month away, and then travel on to New York and Hong Kong before closing on October 14. It comprises about 50 to 60 of the world's most exceptional, polished pink diamonds representing a year's production of the Argyle Diamond Mine. Now, the tender collection includes a beautiful selection of pink and red diamonds. Approximately 150 people globally are invited to attend a private viewing, invited to place sealed bids on one diamond or all, and to celebrate the 30th anniversary, Argyle has created a limited edition collection of Argyle pink diamond pendants with approximate value of $20,000. And I know, Harold, you have taken part in this process. Tell us about it.
Well, the Argyle Pink Diamond Tender is the number one diamond event of the year. And basically what Argyle does is they take their top 55 to 65 diamonds that are all over a half a carat, only a half a carat. That's why these diamonds are considered, so valuable Argyle will take these amazing diamonds on tour to 5 or 6 different cities around the world, and they show them to very high-end dealers and jewelers. We get to view these diamonds in private. We get to examine them with our gemologists. We get to bring some of our top clients if they want to see these amazing diamonds. Then we get to bid on them. You only get one bid per diamond, and it's a closed bid. If you know your business and you're lucky enough to get one, you can own an Argyle tender diamond. These are the most valuable of all Argyle pink diamonds. And again, they are just spectacular, and they go up tremendously in value. So I've been to many of the Argyle tenders. In actual fact, what we would like to do within the foreseeable near future, because there's so few of these diamonds coming out anymore, is to buy, hopefully, the entire next tender and just put them away, because these diamonds go up tremendously in value. They can go up 1,000% in the next 10 years, and there's no other investment that I know of that will give you the return and the safety that you have not only in a rare colored diamond, but obviously in an Argyle tender diamond. And by the way, the diamond that I mentioned to you before that I bought back in 2003, the 2-carat fancy vivid purplish pink Argyle, is a tender diamond. I paid $350,000 for it. It's worth upwards of $4 million today. That's how much these diamonds go up in value. That's how valuable it would be for you to invest your money in an Argyle pink diamond. And this will be the only opportunity that you'll get to do this, because again, in less than 6 years the mine will close. There will be no more pink diamonds, and at that point there, you'll regret not investing in this market. If you have money sitting in stocks or any investment that's risky at this point, take some of that money off the table. Put it into an investment that's not only going to preserve your capital because they never drop in price, but it's going to give you an opportunity to make a lot of money down the road. And we can also sell this diamond in another currency and possibly pick up another 20 or 30% on the currency also. I'll show you how to do that. I'll hold your hand through the entire process. You and I will deal directly together. We keep in touch with our clients, let them know exactly what their diamonds are worth all the time, and when the time comes to sell it, we sell the diamond for you on our auction site, 8 Seagull Fine Auctions. We only make money when you make money. We get 10% of the profit, so if you don't make money on your diamond, we don't make anything. Again, I know this business very well. We started the investment business in diamonds, so we really would love you to deal with us because we have the highest quality diamonds, and the only way to resell your diamond, which is through my website, 8 Seagull Fine Auctions, the only virtual live auction business in the world today.
The featured diamond, a .044 carat oval cut, fancy, vivid, purplish pink Argyle. The Argyle mine in Western Australia will be shutting down in 2020. Get our free weekly newsletter, read the story about the 30th anniversary Argyle pink tender, and no doubt if you're interested in starting a diamond portfolio or adding to your diamond portfolio, our featured diamond would be a must-have. Speak with Harold personally, privately, 1-800-432-1022, 1-800-432-1022. You can also connect with him at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. And as Harold was mentioning, his auction website is hsfineauctions.com. And the next auction will be coming up in the fall of this year. We will let you know exactly when that is going to happen. Harold, we have approximately about a minute left, and it was an interesting show today. Obviously, markets being rocked as we tape on a Thursday, July the 10th in the morning. Portugal, a bank there coming out, and it seems there's concern that they might not be able to make a debt payment. We had in Spain doing a charge, a tax of 0.03% on bank deposits. You can call it a bail-in, you can call it a tax. They're taking money out of your account. Also, geopolitically, some very big concerns in the Middle East, along with the ongoing concerns that we already have. And do not forget, starting next week, Sunday, the 20th of July, we're going to be on at 3 p.m. 3 p.m. on Sundays again, moving from Saturday. So thank you very much, Harold, for another outstanding show.
It's my pleasure, Andy. I wish everybody a wonderful day and a very, very profitable day also.
Connect with Harold, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Take a look at his auction site, hsfineauctions.com. You can poke around and look at what we had offered on past auctions. Speak with Harold about our featured diamond at 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.